Welcome back, everyone, to another edition of Tech Tune-Up. I'm your host, as always, Paul Meeks. Today is August 26, 2025. So, as always, we'll start with some tech news and try to glean some insights that go beyond just regurgitating the news, and sometimes they have even broader impacts. Then I'll show you my buy list, a couple of tweaks this week, and then we'll talk about some broader trends in the tech sector and even beyond. So you might be interested in those, even if you're not solely a tech investor. So let's get after it with today's news, or better said, this week's news. Nvidia has a very big quarterly report tomorrow. And here is why I'm a little bit against the consensus. I agree with the bulls, and I still am long-term bullish, that the company will upside the quarter that they will announce tomorrow afternoon. However, with the Chinese-US tariff and export control trade agreement yet to be settled, I don't think there's going to be any way around Nvidia not going to be able to give us clear revenue guidance from China in the next quarter. So I'm a little bit worried with the stock over 180, trading at an all-time high. I own this stock at a ridiculously low cost basis. I'm a little bit worried that the bulls might be disappointed with that guidance. And it wouldn't be a fundamental problem with Nvidia demand. It would be the supply. Can you supply China or can you not? And if you can't supply China, with what product, at what price? And so there are a lot of things swirling around. And when I talk about the China impact on a company that's supposed to deliver 46 billion in revenue for the prior quarter, we're talking about a potential of $1, 2, 3, 4, $5 billion a quarter from China. So it's absolutely significant. So stay tuned. I will be all over the story, probably all over the news. All the networks have asked me to comment, and I'm sure they'll ask me to comment afterwards. So there are a couple of other interesting reports this week, at least interesting for my sector. You have Okta, CrowdStrike, Snowflake, which has long been on my buy list here. Alibaba comes to us from China on Friday morning. And then the last one is Viva Systems, which is a software company for life sciences that I've had my eye on. Not a household name, but it might be interesting, but I'm waiting to hear what they say. All these companies, I think, are very important. CrowdStrike, the leader in cybersecurity software. Snowflake has been on a hummer the last year or so. And of course, Alibaba is my pride and joy, my top pick from China. And this kind of coming out of nowhere, Viva Systems, ticker symbol VEEV. So we'll see what happens. I'll be back to you. Meta, the nuclear arms race for AI infrastructure and AI talent continues. So Meta just signed a $10 billion deal with Google for Google to supply cloud infrastructure to support their AI efforts over the next 6 years. These are two companies that typically don't do deals together. They're arch rivals in digital advertising. So that in it of itself is unique. And then a separate announcement from Meta that it's going to build the largest data center, again, to support its AI effort in the United States. They're going to do this in the state of Louisiana, and they're going to be supported by Entergy, ticker symbol ETR. This will be interesting. And why is it important? Not only because it shows that Meta is going to go after this or continue to go after this like a pack of wild dogs, but also Entergy is coming at the energy supply, which obviously is important with natural gas. So you'll hear a lot about wind. You'll hear a lot about solar. And for the sake of our world, I hope they all continue to rise. But in the near term, nat gas is where it's at to power these data centers, not just in the short term, but probably even in the intermediate term. Because even if you take a look at nuclear, whether it's rehabilitating a nuclear site or starting one from scratch, that is going to be many years. probably longer than people assume before you'll be able to draw power, at least the huge demand for power, voracious demand for power for these AI data centers. Next up, OpenAI, who got the whole large language model and AI excitement rolling back in November of 2022. I must tell you from what I see, and you can probably read it elsewhere yourself, that their latest chatbot, GPT-5, has met with some disappointing reviews. That's kind of important. They'll have to make some tweaks because, yes, they started this, but they may not finish it because everybody's coming after them. And here's a company that right now, even though it's a privately held firm, it has based on its most recent funding round, a $500 billion value. So if it was to become a public company today, which I think it's going to try to do late this year, early 2026, but with that valuation, it would go immediately to number 17 in market cap in the United States and in the S&P 500 index. Tells you how important they are. So next we have Microsoft. Now, Microsoft needs to, with its law of large numbers, continue to grow. And if it doesn't necessarily have unit volume, though they did show some great gains there last quarter, they have to beef up price. And what they've done is they've quote unquote standardized pricing for corporate customers on what we call EAs, enterprise agreements. Long story short, net, this is a price increase for almost all those customers. So no matter how they describe it, they were looking for a price increase. And if these customers take it, they got it. A couple of quarters were reported in the last week since we last met that I was disappointed in. One was Intuit. Intuit's a stock that had been on my buy list. And the other one is Workday, the enterprise resource planning software company. All these companies are trying to hustle to embrace AI, so they're not disintermediated by it. Workday has been a laggard. In ERP software, I lead with Oracle, not because of its ERP software AI capabilities, but because it has Oracle Cloud, and Oracle Cloud is an outsourcer of capacity for others. That is a nice and growing business. The other company in ERP software that I give honorable mention to, though I'm not on the job right now, is ServiceNow. ServiceNow has always been, at least the last couple of years, the best managed in the group. Now we're off to China, or back to China. DeepSeek, which threatened all the US large language models in early 2025, is back with a new version. And I tell you, this time they're going to lean even harder on Chinese semiconductors rather than ours. And it looks like this model is the real deal, just like the last one was. This version is even better, bigger, stronger, faster, more efficient, cheaper. So it may not be necessarily a near-term threat to the designs of the AI companies in the United States, but yeah, it's definitely a long-term threat, particularly if the Chinese are able to lever their own technology rather than importing it from the likes of AMD and Nvidia. We can't have a show without more Elon Musk. So now Elon Musk is suing Apple and OpenAI because he claims that they struck an anti-competitive deal that is going to threaten XAI. So we'll see what happens. But remember, years and years ago, about a decade ago, Elon Musk was one of the co-founders of OpenAI and then had a parting of ways with co-founder Sam Altman. But anyway, this is another frivolous lawsuit in my view. So Nvidia, man, I told you big news tomorrow, but this is also kind of interesting. Jensen Huang, the CEO of Nvidia, wants to make sure that Wall Street knows that he is working on the latest and greatest, because at some point we will have a lot of AI data centers. And as the building of those data centers start to slow down in the US and abroad, you're going to see AI revenues for Nvidia and AMD fall off significantly. And so, what's the latest and greatest coming out of Nvidia to show us that we have growth on the other side of AI data center building? It's the $3,500 robot brain. And if you do believe Jensen Huang and Elon Musk says the same thing, this could be a big opportunity and another use for NVIDIA's GPUs. Remember, NVIDIA started years and years ago with GPUs or semiconductors that helped make the graphics better on video games. Then over time, it found, particularly with the release of OpenAI's ChatGPT in November of 2022, that yes, these chips can be used for AI infrastructure build. Huge market. Stock has gone up 12 times since then. But now, what's going to be next? Because at some point, the bulls to continue buying NVIDIA after its big move will be thirsting for more. And the $3,500 robot brain might be exactly what the doctor ordered when we get there. Now, I'm not calling for a slowdown anytime soon in AI revenues, but come on, at some point, it has to slow. Next, Intel. I think this is very interesting that, and I kind of previewed this last show, that the federal government is now formally taking a 10% stake in Intel. I will tell you that it's a $9 billion investment. I think it's a bad investment. As a taxpayer, I would rather save my money and have you, with your taxes, pay for this. And of course, President Trump says he's going to do more. Going to take more stakes in privately held companies. It is unprecedented. It's super aggressive. I don't think it's the right thing to do. And in this particular case, I think Intel is such a bag of shit that it might be a waste of money. Next, Databricks. Databricks is another private company that through its most recent funding round has exploded in value. So under the covers, we take a look and we talk a lot about publicly held tech companies, but in the private space. So this data analytics company has just been valued in its most recent funding round at $100 billion. And that is up over 60% from its last funding round. And its last funding round was only last Christmas. So, wow, these big valuations continue. And of course, why are these companies doing this? They are setting the stage for some mega tech IPOs. We'll see Databricks, and then we'll see the most important one for probably the next 10 years. That will be OpenAI. And I expect that it's coming late 25, early 2026. I'm pissed off at the people over at Standard & Poor's. Yet again, S&P passed over Robinhood and AppLovin for inclusion in the S&P 500 index. Instead, today, they put in Interactive Brokers. Now, Interactive Brokers, it's a second-tier Wall Street investment bank. It's not a cream-of-the-crop company, but it does have a $100 billion valuation. However, the very public, the very liquid AppLovin has a $150 billion valuation. Why does it keep getting snubbed? It doesn't seem to hurt the stock today, because before we got on this broadcast, it was the best performing stock, AppLovin, today in the NASDAQ 100. But anyway, come on, man. You cannot avoid much longer AppLovin and Robinhood. You've got to put them in the S&P 500 index. And then the last thing I want to say about Robinhood, one of the reasons I like them, and maybe this is one of the reasons that the folks over in S&P are scared of them, is these guys are very innovative. They will essentially trade anything, including trading phantom shares in privately held companies. That was a controversy from a couple months ago. But now you can trade in what they call their prediction markets, including NFL games. So yes, regardless of what they call it, it's gambling. But these guys are very innovative, and I still think they should be in your tech portfolio. Now, stocks had a big run, maybe on a dip, but it's in my tech portfolio. And we'll see what happens. Now let's get to my tech picks. So, as you know, the ones that I would buy fresh today are in green. The ones that I have moved to the holding pen are in yellow, and that's for either a fundamental reason, perhaps some deterioration, perhaps a reported quarter that I didn't like or didn't like enough, or technically, i.e. the price charts, the stock is broken down. So there aren't really any changes here. I would say a couple of stocks have met that latter criterion, and so they have gone from feast to foul. And I will just point the ones that I've kind of taken off the starting lineup and put off to the sideline. I would not buy Nvidia ahead of their report. Now, remember, my cost basis is crazy low. But I told you, whereas everybody is crowing about this stock, I'm a little bit worried, as I said before, about not what they report, but their guidance. Because how can they give us crystal clear guidance? And Chinese revenues are significantly added to them if they can do it, because we haven't come to the end of the settlement with the Chinese. What are we going to end up doing with them? And this won't be resolved for a few more months, and then maybe Trump extends the deadline again. But it's not necessarily the tariffs for these guys. More important are the export controls. So stay tuned. I don't know if the company, because it's something out of their control, is going to be able to really give us most comfort. So I'm hoping nobody's disappointed tomorrow, but I definitely wouldn't buy Nvidia ahead of the report. Stock could go down. Snowflake. Snowflake, I am waiting on. Snowflake had been one of my favorites. Technically, it has broken down recently, but I want to hear what they say tomorrow. So stay tuned on Snowflake with me. Also, the GE blended companies. Remember, GE split itself into 3 publicly traded companies. GE Verona is interesting. GEV, it is a energy infrastructure play. And then you have GE Aerospace. Both of them I continue to like long-term. Both of them have technically broken down short-term. So I'm not buying them fresh. Microsoft, I think, is a little bit expensive, and the stock has come in, though I did tell you just now about this kind of very sly price increase for corporate customers that they just pushed through. Nvidia, I like very much, but I've concluded I have to buy it lower at $1,150 per share buy limit. And I told you that I got this kind of interesting vibe with Viva Systems, right? This software company for life sciences that you probably never heard of, but they will be reporting tomorrow. And, if I hear the right stuff, that might go to the top of my class. Stay tuned for next week. So also, as you see here down at the bottom, I've turned a little bit more bullish on the Chinese tech companies, and particularly Alibaba. I like the fundamentals there, and it looks to me technically that it's found a nice base and the stock is starting to rise. So stay tuned. So let's get into some tech trends. Dude, it is happening. Despite all the stuff you read and all your anxiety, the Fed will lower rates on September 17th, probably by 0.25%, or what we call 25 basis points. If you take a look at Fed funds futures contracts, they're telling you there's an 86% chance of that happening. But after Fed Chair's Powell's comments at Jackson Hole last week, I'm not so sure that they're going to be able to follow at the October and the December meetings with cuts at all. So we'll see. No controversy about what's going to happen on September 17th, probably a done deal. But there will be some ongoing debate about, do they continue to lower rates of this particular cycle for the October meeting, followed by the December meeting. And of course, I do not like the fact that the Trump administration is pushing so hard on the Fed. I tell you this, that we've already lost Adriana Kugler. She said she retired, but she's a voting member of the Federal Open Market Committee, and she suspiciously retired to go back to her post teaching at Georgetown University. That sounds like some bullshit to me. She was forced out. a lot of pressure, or maybe she couldn't take the pressure from the Trump administration. But then you also have Lisa Cook, who is another voting member of the FOMC, and it looks like Trump is not going to play games behind the scenes. He's going to go right after her and fire her. And the problem is, legally, he may not be authorized to do that. This might be something, if she digs in her heels, that may go to the courts to decide. But in the meantime, obviously, the Trump administration is frustrated that, at least so far, how slow the Fed has been to lower interest rates. So you got direct bitch slapping on my buddy Jay Powell, the chair. You've already kind of behind the scenes forced one FOMC member out, and now we have another one who looks like she's going to dig in her heels, but she will be formally fired. We'll see what happens in the courts. The next thing I should tell you is, at the beginning of this summer, I gave you some interesting, which I thought was significant investment reading. Now, everybody's back at school or back to work, so I can't give you, or I can't lean into the summer reading list. We're at the end of the summer. But I would tell you, there's 2 reports, 2 books, 2 narratives that you have to read if you want to be involved in tech investing, and particularly the AI trend. The first one is a report that has just been published. Well, it was actually published last month by MIT's NANDA, N-A-N-D-A project. The report is called, and you can find easily a PDF online, the report is called The Gen A Divide, Status of AI Business 2025. Very interesting read on what's really going on behind the scenes. We know that there's been an incredible building of AI infrastructure, but the corporations that are hoping to introduce models to lever all that infrastructure, are they having any success doing so? Do these look like they're services that could be possibly monetized? Because if you become disappointed in that, then you're wondering, why the hell are they spending so much damn money on this? Anyway, I think you should read the report. The other one is more of a macro piece, but I think you should read it. I recently read it. Very interesting. Kind of puts things in perspective, not in the short term, but in the long term of technology innovation around the world and how these innovations impact you as investors. This is a book that was written by Carlota Perez, and it is entitled Technological Revolutions and Financial Capital, The Dynamics of Bubbles and Golden Ages. So anyway, this is not the summer reading list. The reading list for the summer is done, behind us. You read it on the beach, but now I still think you should commit to yourself. You want to be serious about doing this like me? Over the next couple of months, pick up that report and that book and read them. So, as always, let's get to some of your questions before we conclude. What about CoreWeave? So CoreWeave, I like. As I told you, I was not surprised with their quarter that they announced a few weeks ago, right? The revenue was strong. The forecast for the next quarter's revenue and probably the next couple of years is strong. Like, the Wall Street consensus estimate for revenue for this year for CoreWeave is about $5 billion. The consensus estimate for next year is almost $12 billion. So we're exploding in revenues. The controversy here has always been, and I think over time they will be profitable and they will show it. But in the next couple of quarters or the next year, some people will describe this company as profitless prosperity. What we mean on the street by that is great revenue growth, no drop through to earnings and cash flow. Now, if I thought that this was permanent and not temporary, I wouldn't own the stock. But I do think that they will show us, but it might not be for the next year, that they will start to generate profits and then increasingly more profits. In the meantime, the stock is broken down technically. Part of that is we recently had the expiration of the IPO lockup, so a lot of shares came to the market, and the bears on those shares immediately grabbed them and shorted them. So there's been a lot of short pressure with some new supply of stock. But I will tell you this, I like CoreWeave. I'm sticking with CoreWeave. I'm going to buy some more CoreWeave, and I'm just going to buy it when the stock settles. Right now is out of the hands of a fundamental analyst like me, and it's in the hands of the technicals. When the stock finally troughs, and what I mean by that is it finds a base, and we hang in at that base for a week or two, and it doesn't matter on every day if the S&P 500 goes up or down. It looks like this stock is unmovable. It won't go down anymore, and trading volume dries up. You can always take a look at a stock's trading volume on any service and compare it with its average volume over the last 10 days or the last 30 days. And so I need to see a trough in the stock for a period of time with the trading volume drying up. And what I mean is you have a couple of sessions where the trading volume is so much less than the average daily volume on the stock. Those are my technical buy signals, and I will buy more CoreWeave at that point because I disagree with the bears and the short sellers. I do think that they will reach profitability, and everybody will be very excited about it, and the stock will go right back from where it came down from. But we just need to have those technical tests met. How do you square BABA and other Chinese stocks with a political risk? Well, I will tell you that I do think we will reach a deal with the Chinese, and that will, in and of itself, lift the Chinese stocks. But I don't go after all of them. I like Alibaba in particular because it is embracing all the themes, AI, and after AI, quantum computing. And so I do think if we were to continue to have a deterioration in our relationship with the Chinese, maybe you don't go there, but I think we are going to resolve this, hopefully without another extension by the Trump administration, and we will resolve a lot of things that day. We'll have a new tariff level. Hopefully it's okay for both sides. We will probably then settle on what's going to happen with the U.S. operations of TikTok. And the biggie, which is so important, what is going to happen with the export controls on our Nvidia and AMD chips that looked like they were going to be able to be shipped to the Chinese. Now they won't. Now the Chinese are saying the low-end version of Nvidia's chips may be a national threat. We'll see. I don't believe any of that bullshit. But I do think we will come to an arrangement with the Chinese. It's going to be a lift in tech stocks, not just the obvious beneficiaries. And I do think you do want to own Alibaba. And I don't know if you want to own anything else, but Alibaba would be a good one. And that's the one I'm sticking with. All right, guys. I appreciate your comments, questions. I'm easily found. My buddies over at Benzinga, who host the program, easily found in between meetings, in between our meetings, which are every Tuesday at 11:30 a.m. Eastern. You can always reach us, and I'll have your, if you give me questions, answers for them. Anyway, we have a very big day, particularly tomorrow with Nvidia and some other companies that I think are key to the tech sector reporting. I will be back, and we'll see you next week.